All right, ladies and gentlemen, I hope you had a wonderful day. We were expecting a crazy week, and Monday did not disappoint. Everything seemed normal. Then towards the end of the day, the Treasury and Janet Yellen, they came in with a shocker that we're going to talk about, but it set the markets off, and we hit another all-time high, and now we are up over 100 points from the latest all-time high that we had. You remember the whole 48.18? Well, now you are at 49.29. Over 100 points higher, and that is continuing from the 4,100 you were at the end of October. So, Chad, we got a lot to talk about. There's still a lot of earnings. We got another earnings play on deck that is looking good for tomorrow, but all in all, we are getting more data. We're getting the big companies, and now we see, does the momentum continue, and does Jerome Powell get in the way? So, what I need from you, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/thestackmarket. We will see you there in the morning. Run it, baby.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
Right off the bat, if you saw how today played out, it looked like the market wasn't doing much. We had a little bit of data. The Dallas Fed manufacturing, it was weak. The bonds moved around. The dollar was already up, but we were staying within the range. And then come power hour, Janet Yellen and the Treasury, they came out with a release, and they said their borrowing estimate for next quarter dropped to $760 billion from $816 billion, and they also expected less money that they would need to borrow for April and June. So why was this all important? Why was this bullish? Because they said, based on how much money we received, we do not think that our borrowing needs need to be that high. Why is that good? Because on Wednesday, we will be getting a refunding announcement, and we are going to hear how much of the bonds and T-bills that they will be selling. So if they're saying, hey, we're not expecting that we need to borrow as much, that means they are not going to sell as much, and that is really good for the bond market. And this was an absolute surprise today. If you asked anybody leading into this, what do you think the Fed's going to do with bonds, you would have assumed Janet Yellen in the Treasury, election year, everything going on, that they would be saying, we need a lot of money, we're going to spend a lot of money. But the news that came out today, this was actually the opposite. Jamie Dimon, he even made comments this morning talking about government borrowing going over a cliff, and then you come out with this news. This definitely was not priced into the bond market. And if you don't know, last time we had any of these borrowing estimates and the Treasury refunding, it was in July and October of last year, and that's when we started getting clobbered and the bond yield started going up. You heard from the Treasury, and they kept saying, oh yeah, we need to borrow more and we're going to sell more. We need to borrow more, we're going to sell more. Okay, maybe we don't need to borrow that much, but we're going to still sell a lot of Treasuries, and that's what caused some of that fiasco towards the end of last year. So what happened today at Power Hour? You could see it on the charts. It was absolutely unreal, and that got markets rocketing up. It was about 40 points on the S&P 500 in just about 30 minutes, and now it's leaving us up with a pretty crazy scenario coming into such a big week with data, earnings, and Powell. Now, here is the final thing you got to understand. Although today was good and it was bullish for the bonds, even for some of the equities, the problem is on Wednesday, you're still going to hear from the Treasury again. So even though they're saying their borrowing estimate is going lower, they may still surprise us and say, yeah, well, we're still going to sell a bunch of Treasuries, and then everything you saw today could get wiped out, or depending on how it interacts, because that Treasury refunding announcement, it's the same day of Powell. We are going to have to juggle a little bit, but this was the main theme of the day. Other than that, it was a boring day, but this news came in and it absolutely took over everything. So that's your first key. We'll see how this plays into tomorrow and keep this in mind for Wednesday. But now, coming into tomorrow, we actually get to start off some of the data. Not only are you going to get AMD, Microsoft, and Google after the bell, we will go over all of those earnings previews tomorrow before they report, but in the morning, about 30 minutes after the bell, you will be getting the JOLTS jobs report, and this one could be big as long as it's not status quo. And what do I mean by that? If you get the JOLTS jobs opening coming in higher or much lower than what is expected, then we could get a really big move. Right now, it's expected to be about 8.6 million, a higher job openings and much higher, like 9 million, 10 million, or even anything crazy. That won't be good because that means the job market is still trying to hire at a very active pace. A really low number, that could be very good for markets, but even better for the bonds, kind of like what we saw today with the Treasury announcement. But the markets, I mean, it's hard to say the markets didn't do better because they are going insane, but as far as the reaction and what we're looking for tomorrow, given what you got today in response to the manufacturing data and how the treasuries moved after this refunding, I do think the bond market will be a little bit more sensitive. And now this data, we are getting over the first month of the year. Maybe this is going to be the data that people are expecting to start moving quicker. So I do think the JOLTS jobs opening can have a big effect. Lately it hasn't, but don't forget, just a couple months ago, I think it was around the Treasury refunding stuff, we did get some killer moves off of the JOLTS jobs opening. So we'll see, but don't forget, with Powell on Wednesday, if it doesn't go outside of the expectations, kind of think 1 or 2 standard deviations, then everybody is going to punt until Powell. And now, like I'm saying, Powell is going to be the main thing. We'll see what the vibe is, but by tomorrow morning, that vibe will definitely change because you're going to hear from UPS and Pfizer and GM, and then you're going to have all those big earnings after the bell. But based off the morning reports, even SMCI first 5 after the bell today, you will have a lot more focus there. And even today, we woke up to a lot of stuff in Europe. There was some bullish comments from De Guindos talking about earlier cuts. That brought the euro down, the dollar went up, but people did feel pretty good about that. So mix that in with earnings tomorrow and getting more results from more of these S&P 500 companies. We are definitely going to have stuff to respond to for a little bit, but then before you know it, it'll be all about Microsoft, AMD, and then Jerome Powell within 24 hours. But Chad, I hope you're ready for all of it. I hope you're locked in, but now let us get into the plays. So, right off the bat, we got a couple of different plays to go over. We did all of our earnings plays. Once again, the 2 standard deviations. I will go over all of those afterwards. Like I said, it looks like we got one that's going to be promising tomorrow. But as far as the other plays, I made a small play on this. I only spent about $16 because it was both ways, $8 a contract. But Pfizer, and I was okay going small on the pre-earnings right before because Pfizer doesn't really move big at all on their earnings. The last 4 earnings, I don't think they have moved more than 1%, and that's even after all of their guidance up, guidance down. They would dump pre-market really big, and then by the morning or after hours, most actually the time they dropped 9%, it wasn't even earnings. So earnings really isn't a big event, but like I told you, they are in a pivotal scenario with how they've been, the decline, ultimate value name, they're trading down 50% still, so depending on what they say, if there is a big move, more than 4 or 5% tomorrow, I don't think those options will be ready for it, and I think there will be a good post-earnings move, either up or down, so watch out for Pfizer. This one is definitely going to be interesting. That is play number 1. Then play number 2, we saw a lot of this last week. Not only did you see SMCI, but the post earnings. If there is still hype, they ended up beating. They are up another 15%. They were pricing in $50. They are up by $71 right now. 2 standard deviations would have been $100. They're right there in the middle. So depending on how this looks in the morning, I whiffed it last time and didn't go after it, but it was still like $70 to $90 a contract. I will be looking for some of those cheap post earnings plays tomorrow. If that hype continues, you may see this one go crazy, especially if a lot of the other earnings are good and there's nothing overseas and we even get the dollar going down and people aren't reacting too negative to the jobs, or maybe that jobs report ends up being very good for the market, SMCI is going to be the one I'm going to go for. But I'm going to try to find very deep out of the money, not deep in the money, out of the money plays and try to get it cheap, because it's just a game of musical chairs. And maybe like NVIDIA, they rip, they beat, and then they sell off. I don't know, but I will be watching that. That is play number 2. And then finally, play number 3. We brought this one up today. A lot of people were asking, but gold, it finally moved today, and it was very weird with how the dollar was. But even after that bond move in the Treasury, it started to get a little bit of a bid. So I'm still not ready to go big on it. But if tomorrow's data and things start leading to the bonds bouncing more, I think that's going to add pressure on the dollar, which has been going up, and I think it'll start lifting gold a little bit. I still have a MGC, a micro gold. I'm like barely up on it, but I will be watching out for that. But unfortunately, I'm not feeling as good as I was a couple weeks ago, because we still need some of that cyclical momentum from the rate cuts and all of that stuff. So keep an eye out for it. Overall, just watch if the dollar does come down, though. I do think that will help out gold a lot. But those are the main plays. As far as everything else, the main one that I think is going to hit after the moves we made today was First 5. So I brought this up on the watch list yesterday. They haven't moved in like 2 years, and well, on this earnings, they were able to. We grabbed the February 210 calls for 55 cents, and then I grabbed the 155 put for 33 cents. We spent about like, what, $88 to go both ways. But the thing about it, 210, this one is 2 standard deviations, so they kind of moved a little bit above 1 standard deviation. At one point, it did go in the money, but if it does, this should be able to return a decent amount, play for all of the other plays. I think we spent $250 for 5 different plays today, but overall, I do plan on holding this one. We got a little bit more time. It should get some upgrades, but they beat on everything. They guided up. They beat on the earnings. There were some areas that weren't as good, but they were not shocked too much. My TD's going crazy. It keeps saying the Forex market's open, this and that. But anyways, that was play number 1. Going to be watching that tomorrow. Then we went both ways on Pfizer. These were 2 standard deviations. Like I said, I spent $16, made a small play. I think it could have been a pivotal earnings, but even then, I do think the follow-up will be bigger. Then we went for the 2 standard deviations on UPS, but I actually went a little further. So 2 standard deviations, I think it would have been like 175 and a 140 put. I decided to go a little further, so I didn't end up spending that much money. Ended up going with $67 instead of playing both ways for like 90 or 120. So thought I'd balance that one out. And then I went one way on HCA, Healthcare of America. They're up like 30-40% or something on there. No, that was Pulte. I think this one I also went both ways actually. But HCA, they were up a lot. I saw a lot of healthcare names get destroyed. 2 standard deviations. Grab one for 35 cents. And then Pulte, this one was up a lot. So I decided to grab the put for 40 cents. This one was 2 standard deviations, but then the call, I pushed this one out a little bit so I didn't spend too much. But I was able to play, I think, 5 plays. Most of them, or 3 of them, were both ways. The other 2 were one way. Or no, I think only HCA was the only one. But besides that, wasn't too bad of a day. We'll see how those FFIVs play out. And then tomorrow on stream, we will be going the rest of the earnings. So tomorrow on stream, if you come around like 11 a.m. Pacific time, we'll be going over Microsoft, AMD, Alphabet, Starbucks, Skyworks, Juniper, Match, Lending Club, EA, and CP. And then we'll cover Boeing, Novo, Phillips 66, MasterCard, Thermo Fisher, and all the other ones in the morning. But we'll see what tomorrow brings, see what the data is, if we get any more of this Yellen Treasury hangover, but it's going to be a wild one. But Chad, that is your watch list, ladies and gentlemen. Make sure Hydrate Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, we could all be annoying, and we're annoying about things that don't matter sometimes, but I encourage you to be annoying about the things that are going to change your life. Always pursue them with an annoying manner. Go after them. Don't give up. The squeaky wheel gets the grease, baby. Tell them, Chad, but stay in the game. I love you all. Drink that water. Stay hydrated and healthy, and have a wonderful evening. And horn.